Hello, thank you guys for joining. My name is Rachael Burns. I'm a certified financial planner, certified divorce financial analyst, and I am about to be joined here in just a moment by Heather MacFarland. So doing that, that'll just take a second. I'll just oh, there you were. That was quick, easy. Well, thanks for coming on, Heather. I'm really excited to talk with you today. You and I have had some really interesting conversations, and I feel like the stuff that you have to share is not common knowledge, and so I'm excited to share that with everyone else. I'll go ahead and kind of introduce us. So, like I mentioned, I'm Rachael Burns. I'm a certified financial planner, certified divorce financial analyst. My firm is called True Worth Financial Planning, and I help newly single women get their finances back on track, either after a divorce or the death of a spouse. And Heather, if you want to kind of introduce yourself, that would be great.
Hi, my name is Heather MacFarland. I'm a realtor. I'm currently practicing in California. I've previously practiced in both Illinois and Maryland. I'm also specialized in the area of divorce. I'm a real estate divorce specialist. So I've started to concentrate my real estate practice in that area. And yeah, I'm very happy to be here. We have had some great conversations. So I think there's a lot of value that can come out of this for people.
Yeah. And so today we're going to be talking about common misconceptions when it comes to selling a home during a divorce. So selling a home at any time is a relatively complicated process and can be overwhelming if you haven't done it before. But if you're doing this during a divorce, it adds this extra layer of complexity. There's all these little like nuances that are not common knowledge. It's easy to make mistakes during that process. So if you're thinking about selling your home, if you're thinking about getting divorced or whatever, when you're working with a real estate agent, it's really important that you're working with someone who's familiar with these misconceptions, because if they are not used to the divorce process, maybe they're an expert in real estate, but the divorce specific stuff might be something they just haven't run into. And so what we're going to talk about today is some of the major misconceptions that Heather runs into. And then that way you can avoid those mistakes in your own divorce home selling experiences. So I just have some questions, Heather, for you. When you are splitting up and your spouse is moving out and you're in the house alone, but you co-own the house, and if you want to sell the home, can you just do that? What does that process look like?
Yeah, so, and I always preface everything with you need to speak with a divorce lawyer. I am not a lawyer, and I'm, not, don't want to come off that I'm giving legal advice. But in general, once a divorce has been filed, so once either partner has filed, there's generally a stay by the court on the movement of all property. So even if both spouses verbally agree that, you know what, we're just, you go ahead, take the house, sell the house, that's generally not something that's going to be allowed to happen without going through a court process, because that's community property or marital property, depending on the state you live in. California is a community property state. So, marital property is not generally allowed to be disposed of without the acknowledgement of the court, without the court saying, okay, yes, you can go ahead and sell the house. And certainly not, you can't, as one spouse, decide that you're going to sell the house, even if your, soon to be former spouse is no longer living with you. You can't just on your own decide to sell the home. That's something that, occasionally people, knowingly or not knowingly try to do. And that just isn't something that can happen. Obviously both people have to have consent, and once divorce has been filed, it most often has to go through a court order, the selling of the house. Sometimes the court orders it to be sold. Other times, the spouses want it to be sold and they ask the court, for that allowance. So, it completely depends on what's going on in your particular case. Every divorce case is different, but there's that whole extra layer. and it's up to the real estate professional on their end to make sure that all those bases are covered, that this house can be put on the market, that it is allowed to be sold during this process and at that time.
Yeah. And I would imagine, right now it seems like, at least where I live, I'm sure it's similar where you are in the Bay Area, but if you buying a house or selling a house, it's a hot market. Things happen really quickly. And if you want to sell your house really quickly, it's really important to understand you can't just do it. There's a process. You need to figure in that time. And it's just good to know if you're expecting, oh, I'm going to be able to put my house on the market tomorrow and I'm going to get 10 offers the first day and it's just going to be a done deal. That's not
right.
Real reasonable expectations. So that's good to know.
Right. Exactly.
So what if your ex is living in the home and the house is for sale, but they're not cooperative with the process of showing the home and interacting with the realtor and things like that?
Yeah, so that's definitely something that can happen. It's just one of those other layers that can occur during the sale of a home. And there's always a lot of emotion involved around selling a house in general. Yeah. Homes are very personal. They're oftentimes your biggest asset, the biggest financial transaction you'll have in your life. Yeah. Married or not, divorcing or not. So there's a whole lot going on into it. Particularly during divorce, emotions are running oftentimes higher than normal. Sometimes there's some, conflict and some resistance, and, it's possible someone doesn't want to sell the home. And there are instances sometimes where, when showings are going to happen, that the house is not made available. If the house is made available, that it's not in a condition to show. I've heard stories of where a dog was repeatedly left out so that the realtor could not enter to show the home because of the dog, and it actually, had to become a court situation to compel that person to, make the home in, a condition that could be shown and make it available, not have the dog loose, have it in decent condition. Yeah. I can go a little bit to my own experience in that. One of the reasons, the main reason I got into this aspect of real estate is I did have to sell my home during my divorce. I was already a real estate broker at the time in the Chicago area, and there were a lot of layers involved in that I didn't expect. One of them was, I had children in the home who did not want this sale to happen. Yeah. And so I had definitely difficulties with showings as a result of that, having resistance, and rightfully so. This was a very upsetting time for everyone, and it was extremely difficult. And so getting the house ready to show when you have children who are resistant or upset, they don't want to leave the house for the showings and things like that. Like I said, that's hard enough in a normal situation, but this was particularly difficult because it was the family home. So I always try to operate with that in mind, that this can be a very difficult situation, and it's not just about getting this house sold. There are people involved. This is a family. Oftentimes, there's children involved if it's a family home. Sometimes there's not, but that also is something that needs to be considered. So that's something that I counsel my clients on is, when this process is happening, maybe be prepared for some extra emotion that you may not be expecting. Yeah. You kind of have to see how that goes, and be prepared for that. And maybe there needs to be some extra preparation, as far as other people in the household with getting the house ready, that this is something that's happening, showing the home and stuff, to avoid some of that. So it doesn't become, like I said, it's always going to be difficult, but knowing that these things can happen ahead of time, I think is very helpful in making it as smooth as possible. Yeah, that's a really good point. Just being aware of the emotional aspects in yourself, but also in your family members, because your ex is going to have their own emotions, your kids are going to have their emotions. I can only imagine
trying to sell your home with a uncooperative ex who's like, you know, sitting on the couch in his underwear during a showing, like eating cereal or something. You can imagine how that could go wrong. But hopefully, you know, if you go into the process with open eyes, knowing, okay, this is going to be a little different than the average, you know, home selling, and just kind of dealing with those things as they come up. But that's really good.
Right.
Yeah.
Yeah. And like I said, you know, I've seen and heard about different situations, and I've had my own, you know, so yeah, that's definitely, you know, the more you can plan and prepare, the better, the easier it's going to go for everyone.
Yeah.
And, you know, and the final goal at the end of the day is to get everybody to be able to be in a place where they can move on into their new future, whatever that may be, however that looks. So, you know, that's always, you know, my goal, and, to help the families.
Yeah, definitely. That's great. So I'm curious, there's some tax nuances with selling a house when you're married versus when you're single. And that's something I've come across a lot in clients who are married selling a house, or who are in the process of a divorce. But I think there's some misconceptions about how taxes are paid after the sale of a home, and how that works if you're married versus single. Do you want to talk a little bit about that?
Yeah, so that's definitely something that needs to be considered. So a married couple, they can not pay capital gains on up to $500,000 on their home when they sell it. A single person, it's $250,000. So when you're selling a home during divorce, or if you're getting divorced and you're looking at taking, you know, the home as maybe part of the property, you know, maybe you're going to take the home, and then your spouse, soon to be ex-spouse, is going to take the retirement. But one thing you need to think about after you sell is, how much capital gains tax am I going to have to pay? And in a market like, particularly in this market where we are in California in general, and in the Bay Area in particular, sometimes, you know, you're making a good amount of money on your house, which is a good thing, but you can very easily break that $500,000 level as a married couple, and $250,000 if you're now single, and, you know, you sell your house for, you know, $750,000 more than what you paid for it. You know, you're now paying capital gains on $500,000 as opposed to only $250 had you still been married. So that's something to look at, the timing of the sale. Sometimes, you know, people will decide, you know, and it also depends, like, how long your former spouse has been out of the home, if they're still on the deed or not. You know, sometimes they can be living out of the home for a certain amount of time, you know, and that's something that you'll have to, you know, confer with. Like I said, depends on the state, you know, different situations, but, you know, you still may be able to, even if you're not living together, still take the full $500,000, depending on how long your former or soon to be former spouse has been out of the home. Or, you know, couples might plan, you know what, let's just go ahead and sell this now, you know, and be able to take the full 500, and then that just, you know, may leave more funds for everybody, you know, in the end. So you really have to look at your situation. And like I said, you know, it may be different in other parts of the country too, because some places, you know, that $500,000 is a wishful dream, you know, of you know, capital. And it depends too. Maybe you just bought your house a few years ago, and you know, you haven't paid that much down on it, and you don't have that much equity in your home, so it may not be a big deal. It just really depends on your situation. So but that's definitely something you want to look into. And I'm sure from your end as a financial planner, you know, and planning for that, that's a big part of it, because, you know, $250,000 difference, that's $250,000. That's a lot of money. So that's something that needs to be planned.
Yeah, and just to kind of give some more examples around that, because if you're hearing this and you're wondering, okay, well, how does that apply in my situation? So both Heather and I live in California. Heather lives in the Bay Area, which is like the most expensive real estate in the universe. I live near Sacramento, pretty darn expensive, but not as expensive as Bay Area. So let's say you live in the Bay Area, it's not unusual at all that your house will go up in value, by several $100,000 in a relatively short time. That's not unusual at all. So if you're married, let's say you buy a house for $400,000, it would be like a 50 square foot apartment somewhere. You spend $400,000, and let's say it's gone up to $800,000. I'm picking bad numbers for this, but okay. So let's say it's gone up by more than $500,000.
Mm-hmm.
If you guys sell that house while you're together and you have the benefit of that, each of you has the $250,000 exclusion for capital gains, and you only owe capital gains tax on, I should have picked easier numbers. Okay, let's say it was $500,000. Now it's $1 million. So then in that case, you each get the $250,000 exclusion. You're good. You guys don't owe any tax on that house, even though you made $500,000 in the time that you've owned it. You don't owe any tax. But let's say we're not selling the house right now. I'm going to keep the house. My spouse is going to get other stuff. He's going to get retirement funds. So I have this $1 million house that we bought for $500,000. If I next year went and sold that house, even if the house didn't go up in value in that time, if I went and sold it myself, I can only exclude $250,000 worth of gains. So there's still another $250,000 of gains that I am now paying taxes on at my single rate, which you pay a higher rate technically when you're single. And so that, if I went and sold the house later, I don't get nearly as much money as I would have if we would have sold the house at the time of the divorce, took the proceeds and went our own way. I would end up with less money in that situation. So if you're going through the divorce process and you're like, okay, I have this house, it's gone up in value, I don't plan on leaving, I don't care about the capital gains because I'm not selling it anytime soon, then maybe it's not that big of an issue for you. But if you're like, okay, I really want to keep the house, but then next year I'm going to decide, maybe I'm going to sell it. You need to be aware that you could end up paying extra taxes because of the timing of that. And if that sounds confusing, it's because it is. And I'm not saying, okay, after listening to this, you're going to know all the things you need to know about the taxes, but just know that the taxes are tricky when you have a house that's appreciated in value and you're thinking about selling it either during the divorce or after the divorce. You just need to know that there's some extra complicated stuff and you need to talk to someone who can walk you through that, because it can be a high dollar mistake that can be made there.
Correct. Yeah, and that's why it's very important to work with someone who's aware of the particular
Yes.
market that you are in. Like
Yes.
we were speaking, California, that's a very, very plausible scenario
Yes.
with most house sales,
Yes.
particularly in this Bay Area. But if you live, say in North Carolina or somewhere, it may not be. But you need to work with someone who knows that particular market and can give you advice. Look at how much equity you do have in the home. Make a good valuation, and so they can give some advice on what you might be looking at in gains, so you can make those decisions and about when to sell.
Yeah. And then when you're trying to plan, okay, we're selling this house, I'm trying to get an idea of how much money we're going to net out of this house, how much I'm going to net, how much money there is available to split, because you're looking at all of your different assets as a couple, and you've got the house equity and you've got other things. So when you're trying to work out a plan and you're trying to get an idea of what you're going to net out of the house, that's not a super straightforward thing either. It's not like, oh, okay, well, I think my house is worth $600,000 and we owe, there are other factors that determine the cash that you actually get at the end of the day. So Heather, can you talk a little bit about that?
Right. Yes. So, so a lot of times, people are, they may be making different decisions like, okay, do I want to take the house? And often, a lot, I won't say oftentimes, but I have come across, and in my case, sometimes the women, because if they're staying as the primary caregiver of the children and they want to keep the children in the home for the school district and for the continuity or whatever, they may think about, okay, I'll take the house, whatever equity and stuff that I'll be gaining, that I have, then I'll give my ex-spouse that much in our retirement funds. It's very important to know exactly as possible what the value of your home is and what the equity you actually have in it. So you need to get a very comprehensive, number one, a market analysis, just to know, what your house would very likely sell for. So you kind of know, at least at that point in time, you can't predict necessarily what's going to happen in 5 years, if you're not looking to sell your home for 5 years, but kind of at least get a starting point of, okay, if I were to sell my house today, this would be, the range in which it would sell. So you need to work with a real estate professional who knows the market and it can give you that number. But there's a lot of other things you need to consider that sometimes people don't think of, particularly if you're giving up other assets, saying, okay, I'll take the house, you take, the retirement funds, or other assets. So, and this is another thing where I personally made some decisions that had I had at this point in time better advice. And like I said, I was already an active real estate broker at that time, and there were just things that I didn't think of. So in my case, I took the home as my asset, and I gave other funds to my now ex-spouse. But what I didn't look at, I knew what the house, was likely to sell for, and I knew that I would be selling it in a relatively short amount of time. But what I didn't look at were some issues like deferred maintenance. So I recommend that everybody get, in addition to a thorough market analysis, also a home inspection, a thorough inspection of your house. Because what happened to me was, when I did go to sell the home, just, a relatively short amount of time later, within the first couple years, I had it's called a cracked firebox, which is a major issue with your furnace. And I had to have my entire furnace replaced before I could put it on the market. I also had the problem of, this isn't necessarily a problem in California, but if you live in a lot of other states, the issue with radon. That's a gas that can seep into homes in the basement level, first floor level. Where I was living, it was an area where we had finished basements, and so we had a full finished basement. When I went to put it on the market, part of the inspection is it got tested for radon. I had too high of a radon number, so I had to do what's called radon abatement before I could put it on the market. That was several more $1,000s. I had issue with a roof leak that was not obvious until the home was inspected, that also had to be repaired. And then so all those items, I had to pay out before I could even list the home. So that came off of my bottom line.
Right.
Had I had an inspection previously to making that decision, I would have had a better idea of, okay, there's $10,000 worth of work that's probably going to need to be done, just giving the number before I sell this. So that's something that should be considered then, in the split of assets, or maybe when it comes time to sell, your ex-spouse has, there's an agreement that they pay half, or you get these things done, prior to, the split of the home, like you taking the home, there are different ways that can be managed, and that's something you work with your attorneys and everything. There's other things too, when people take that. So just putting your house on the market will cost you money. Number one, you're looking at realtor fees, high realtors. Those are typically paid by the seller. So, 6% is typical. It can range around there a little bit, but so the seller will pay 6% of the sale price out towards realtor fees. There's a lot of other fees that come into the sale. There's transfer taxes and different things that will cut into the actual money you walk away with at the closing table. because all those things are taken out at closing. So even though your house may sell and you're thinking, oh, my house sold for this, I'm going to make $250,000 by the time all this other stuff is added in, you may be walking away with $225,000.
Right.
And just putting your home on the market, there's things you generally will need to do, possibly, fresh paint, there's some repairs that need to be made, different things to make your house marketable that, it depends on your situation. Sometimes that can be pretty expensive.
Yeah.
There can be, quite a bit of stuff that needs to be done before you can market your house. So that's something else you need to consider. It's not just the sale price or the likely, the predicted sale price of your home and and what you're going to get from the sale. You have to look at all these other expenses before you make the decision about, what an equitable trade would be in other assets, and as a financial planner, I mean, you know how things go, like with retirement, so you may give up, say, $250,000 in your retirement fund to take $250,000 equity in the house. You end up only walking away with, say, $225,000 worth of equity, while your ex-spouse who took the retirement fund has been making money on that the entire time because the stock market's doing well. So there's a lot to think about with the sale of the home, and like I said, I did that. It was sort of an emotional thing for me, definitely. Even though I knew obviously the market and the market value of my home, I didn't take some of these other things into account. And I was very emotionally attached to the home, as were my children. And, so I wanted to stay in the house as long as possible. So, looking back on it now, had I done a pre-inspection, a detailed inspection, I would have, asked for more, a different asset split, to kind of make up for some of those things. And the things, people can have, whole, like, for example, whole termite infestation going on in their house, and they have no idea until 2 or 3 years later when they go to sell it. And, then there's all this damage that's been done. So it's really important to know those things ahead of time before you kind of determine what actual money you're going to walk away with at the end of the day, as best you can. I mean, obviously you can't always predict everything in the future, but you can definitely get a better, a tighter idea on what actually someone would walk away with after the sale of the house.
Yeah. And especially with an older home, there are things lurking everywhere.
Right.
My house is almost my exact age. So we have that in common, but like there are all these little things that you don't really think about. And then the second you go to fix one thing, it reveals this underlying problem that's 10 times more expensive and it's going to take 10 times longer to fix. Houses, it's like the house is one of your largest assets, and it's the least straightforward to value when you think about what is this actually going to cost me in the long run in terms of maintenance and all that stuff. Like, it's complicated. And so when you're in the middle, and when you're trying to figure out how you're going to split assets, you can't just look, like you said, you can't just say, oh, well, there's $250,000 in equity in the home. There's $250,000 in this IRA. You take this one, I take this one, and we call it even. Those two things are not even. Right. It's not even in how the values change. It's not even in how they're taxed. Two totally separate types of assets. And so that's why it's really, really important when you are making these big decisions in your divorce, whether it's, do I sell the house or should I take this instead of this or whatever, you really need to meet with people like Heather and I who have experience specifically with the divorce aspects of these massive financial transactions, because we don't expect you to be an expert and to anticipate, I might need a new roof and I might need all these things, and therefore I'm going to get less money and therefore I need to ask for more. We don't expect you to know the future, but when you work with someone who has experience in that exact type of situation, they're going to foresee potential issues and they're going to help you put things in place that prevent that from becoming a problem later on.
Right. Exactly.
Well, I think those are kind of our four main misconceptions that we had talked about. So just to kind of recap, you can't just sell your home willy-nilly. You can't just be like, I'm going to sell my house tomorrow.
Right.
There's a process in place to make sure, you know, the court has to sign off on it. If you're in the midst of the divorce process, your ex needs to, you know, agree with it. And,
Right.
you know, and they also need to be kind of sort of cooperative with the process,
Right.
because they can make your life difficult.
Much as possible.
It's possible. So it's something to keep in mind, that maybe that's not super easy to get them to like go along with it. But and then when it comes to selling the house, in terms of like selling the house as an asset, there's some nuances to how it's taxed, depending on how much your house is worth, depending on how long you live there. You could determine how much in taxes you owe or don't owe. And that's a big dollar value that we're talking about. So it's really important to know what to expect with that. And then also just like things that can determine how much money you actually net out of the sale of the house that you might not be thinking about, like realtor fees or deferred maintenance, or, you know, all these creatures that are lurking in your walls.
Right.
that can impact the amount of money that you walk away with after your divorce. And that's super important.
Right.
And so if any of you have questions, Heather, what's a good way for them to contact you?
Yeah, so you can, through my Instagram, you can DM me. I have all my contact information, you know, my phone number and everything. So, you know, whatever works, you know, everybody likes to communicate differently. And I do know sometimes, you know, with divorce and stuff, you know, people try to keep privacy and things. So, you know, I'm always very conscious of that. You know, not everybody, you know, wants to broadcast that they may be selling their home because they're getting divorced and so on. So, you know, yeah, contact me. All my contact info is in my in my profile. So I am available to, yeah, help answer any questions. And, you know, sometimes it's good, even if you're kind of thinking that way and you're not sure, and, you know, it's always good to just be educated, you know, just because even if, you know, you start talking about it, doesn't mean you necessarily, you know, have to go through with anything, but it's always good to be very educated, you know, with what's going on with your financial assets, you know, even if you're starting to contemplate the possibility of separation or divorce. It's good to know more than less.
Absolutely. That's really good advice. I think it's really good in general to have a good understanding of your financial situation when you're walking into a divorce, and having a good understanding of what your financial situation is likely to look like in the long run.
Right.
Because a lot of people are reluctant to leave a relationship because they don't know what to expect. And you can have a conversation with people like Heather and I, that we're not going to charge you by the minute like an attorney does. We can help you get an idea of what that would look like. And maybe that's not as scary as what you're expecting. I mean,
Right.
it's having that information is going to make you feel so much more empowered to make decisions about your own situation when you know what the financial consequences of that is.
Exactly. And yeah, then it just ends up being better for everyone.
Yeah.
Better for everyone, you know, because at the end of the day, this is a family
Yeah.
that's, you know, reconfiguring itself. And, you know, the goal always is, you know, and it should be, you know, that everybody comes out as intact as possible, and as best a position, as good as the position as possible, financially, emotionally, you know, being ready to move on to the next portion of their lives. And yeah, just being educated, having the right people in your corner, the right professionals who can best guide you, can, you know, really get you set up, you know, for the best case scenario. It's always
Yeah.
difficult, but it can definitely be made a lot better.
Absolutely. Well, after this live, we are going to be posting a recording into IGTV, and then I believe it'll end up on both of our feeds. So if anyone missed any portion of this They can watch a recording of that after the fact. And please feel free to contact either of us. So Heather is the expert on all the real estate stuff. I'm the expert on the long-term financial planning, or even the divorce asset split, the financial part in the midst of a divorce. So please reach out to either of us on Instagram, or you can go to our websites. But yeah, please ask us questions. We are delighted to help people, especially who are going through this difficult process of a divorce. That's what we're here for. This is what we're passionate about. So please use us. I encourage you. So Heather, thank you so much for joining. This has been, I've learned so much from you, and I'm so excited to share you with the world. And yeah, I think this was a great topic that isn't discussed too much. So
yeah, I think it's very valuable, and it's just one of those things. Nobody wants to think about divorce, talk about divorce, but by doing so and preparing, it helps everything be better for everyone in the long run. So
yeah, absolutely.
Thank you so much, Rachel.
Thank you. Well, everyone, take care and enjoy the rest of your day. Okay, bye.
Bye.